Hey, look at that. We are live from my upstairs bedroom here in Philadelphia, North Philly's finest neighborhood by the great Lenape land known as Tacony Creek Park. Um, Today's guest, on the Not a Podcast show, I'm your host, your live stream host, Sean Ongley. Today's guest is an acquaintance of mine by the name of Kyle Hedman, and he has a show now called Band of Traders, used to be called Two Bulls in the China Shop, that he did with a friend of mine who I grew up with. And we'll figure out where the show's going or just talk about where the show's been, where it's going, and all things markets. It's a stock trading, financial markets podcast. Uh, that's something I've been doing for a few years. I haven't grown great wealth, although I did well when the markets were fantastic. And everybody at that time believed that they were geniuses. And I didn't, I'm no exception to that. Made a few good trades, held on to some things too long, but we'll get into the details of what I did right, what I did wrong. Check my stuff out, like, subscribe, all that good stuff. Go forth and heal yourselves. Let's talk to Kyle. Hey, Kyle, how are you?
Hey, am I in?
You're in.
All right. I think you said, you referenced the podcast. I was over here shouting, not a podcast, not a podcast.
I swear I said not a podcast.
You did.
The Not a Podcast show. I kind of want to change the name, but I don't have one yet in mind.
I'm not going to lie. I had to look up what a troubadour was before jumping on here. I thought that was the name of it.
Yeah. I just thought it was a music venue in Los Angeles, but then I learned it's like it's a venue called after,
Fair enough.
kind of an old English word, I think.
Yeah, it's like it's a kinder way of describing an artist without a home.
You could say that. And also that was from last episode, Jake Nolan.
Okay. That makes more sense.
This one is called Another Day in the Market because another day, it's closed. We can talk about whatever happened today.
I heard some of your intro there.
I'm having like noise here in my headphone. It's probably just me in the headphone.
I'm not hearing anything.
Okay, that's
good. I think that's just you.
All right, great.
I heard your intro, and it was a great point referencing the bull markets of post-COVID and how pretty much everybody was able to do well in that environment. I think the joke was at the time you could just type in your initials into a stock picker and then basically buy that and make money.
Yeah. And for those of us who jumped in during that time, we having no perspective, we thought that's how it always was.
Right, exactly. But I actually think that jumping in those, like, that almost reinforces like the stupid mistakes that you're making as a beginner trader when you're trading in that kind of environment. In fact, the worst thing that can happen is to get rewarded for bad behaviors, because then it makes it harder to, like, it gives you no reason to learn or change or adapt.
Of course. That makes me just think about all kinds of things involving financial institutions, retail traders. There's just a lot of greed in the financial markets. So there's a lot of risky behavior and irrational things that go down.
Well, the more you learn about the markets, the more you realize that it's all dictated by emotions. In fact, I think that's pretty much the main job of the institutional traders out there, is to manipulate your emotions to get you doing things that you normally wouldn't consider: buying tops, shorting into the bottoms, those kinds of things.
Yeah. That's kind of conspiratorial, but I'm with you on it.
It kind of sounds like it, but the more you read about it, the more you learn about it. Like, I'm sure everyone's seen that graphic that shows like the market cycles of the person's emotions, like greed, euphoria at the top, and then on the downturn, like you're going through the anger, like almost like the entire grief cycle, until you get down to despair, where you're like, fuck it, I'm done. When you sell, that's when the institutions are there buying it up and selling it to you at the top when you're euphoric and greedy, and repeating that cycle again.
I want to say that I didn't succumb to that so much, but we can get more into it later. I want to get into you a little bit. Well, let's start from the beginning, man. Where are you from? Where are you at?
Um, well, you mentioned our the old co-host from the show, Dan Leeson, growing up with him in high school. So if you went to the same high school, then we probably went to the same school, Mountain View in Tucson.
Right.
So I was born in Houston, grew up in Arizona. I've spent 6 years in the military, so I've been kind of all around the states. Settled into Peoria or Pekin now, just south of Peoria in central Illinois.
Okay. So grew up in Arizona there in Tucson.
Yes, sir.
And was your household financially literate or hand to mouth or paying the bills?
I've been kind of thinking about that. Like, my mom's been very, very well for herself later in life, but it was almost like a second wind that she got that led to those circumstances. Because I don't remember being extremely well off as like a kid growing up. My mom was always great with like teaching finances and like credit, and she understood the importance of that and made sure that we all, didn't fall victim to the spending trap. But I also point to my grandparents. They did a fantastic job of basically teaching me the value of money, but not just the value of having it, but also the joy that comes from spending it on other people too. They used to let me roll pennies. So if I rolled pennies that they collected throughout the year, then I get to keep whatever I rolled. But then at the end of that, then I'd take everybody out for ice cream or something, like just a little treat to give back some of that. So it is kind of an interesting lesson that they taught that I didn't really appreciate until, now in my 40s, but really grateful for the values that they instilled in me.
That's good. Sounds a little bit more together than my household.
What'd you grow up in?
I mean, I don't want to disparage my folks, but they, you know, got into spending traps, debt spirals. They got into typical type of stuff. And I did persuade my father to move his money to a
Hmm.
self-managed account, and that was when the markets were really doing well. So, you know, he's he's been weathering the storms, but whether it was a mistake or not is yet to be told. I think we can, you know, I think he can get it back. All just as me, I'm down. My portfolio is down. It's
Hmm.
about flat. Actually, it's about flat, and it's
Do
been
you
recovering this year.
do you only trade the long side, or are you willing to go short?
Well, you need like a margin account to go short, so
Yeah,
you need a lot of
exactly.
money in there.
Hmm.
You need that's like a pattern day trader account, basically, right?
Yeah, yeah.
Yeah,
Although you could use options contracts like puts and calls to give yourself some more leverage, but again, you're going to need probably a margin account to be able to take advantage of that as well.
Robinhood just lets you do puts and calls.
Oh, they do. I have not touched Robinhood since that whole GameStop fiasco.
It's fine. They just took the heat.
Hmm.
They took the front of what all the institutions wanted to do in that situation.
Yeah, they were definitely not the only people doing shady things during that time, but they are definitely the ones that were probably at the forefront of it.
And I think that's by design. I
Hmm.
think somebody made the agreement. Robinhood's going to take this, um, take the first bullet. But yeah, and I think just if anybody doesn't know what happened there, the GameStop squeeze. That's a great example, though, of bad behavior in the markets.
No, yeah,
Um, the and not on the retail side, really, because they exploited something that was, an
it's
obvious thing to do. The institutions were out of control with naked shorts, so they were naked with no shorts, and so the Game Stoppers gobbled up all the shares, and that's a perfectly legitimate thing to do in that moment.
hmm. It's happened in
And
the past. It'll happen again in the future.
yeah, I've made money on short squeezes.
Hmm.
Um, but what happened was the institutions decided that they should have the right to say whether or not they want to trade a certain stock, which is blatantly stepping into the market and making it and leveraging your influence as a bank, right?
Mhm. Well, I think the biggest thing they did is they shut off the buy button at one point, and they
Yeah,
kind of go into it with the movie, but they still allowed selling, which was what was the most gross thing
right.
about it.
Yeah, yeah.
Yeah, you can't tell me that that's not something shady going on there.
Manipulative.
Yes, yes. But
You surely forced some sales.
on the other hand, though, the retail side, I think, got a little bit greedy. If you read through the message boards at the time, like everybody is holding for the moon, basically. Like it turned into something that was started out with a way to make some money, and then basically turned into this David versus
A
Goliath type
religion.
story. Yeah, 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 yeah. And there's no room for that in the markets if you really want to make money.
No, I would imagine somebody was behind that to, and they knew better. They
Oh,
took their profits.
I'm sure. I'm sure. Some
Um,
people got paid. Somebody got paid a lot.
yeah, so there's a lot of bad behavior that goes around, and it's good that you had a good upbringing in that. I think that's powerful for a kid to observe. It's probably what led you to this. But you were just working. You were a working man. Did you work in a steel? You worked in steel. What was it?
Yeah, as a steel mill electrician,
Okay.
um, actually a maintenance supervisor towards the end of my career there. A lot of like you know what a PLC is, programmable logic computer. It runs all the automation for like you can set them
Sure.
up to basically do whatever you want. Like I was the guy who would program those or fix those machines or the auxiliary inputs of the I/O that feeds it. That's what I did for the
So
steel
you
industry.
handled the hardware or both hardware and software side.
Both, and then everything from like 34.5 kV all the way down to 24-volt DC. So everything from the high voltage coming in down to the low voltage IO. That was my job.
So while you were there, you were earning like a 401k or
Oh
something.
yeah, yeah. It's a good job if anybody wants to get into that kind of field. Highly suggest learning a trade skill, and you can make some really good money doing that for very little education.
There's a lot of things like that, and that in our
Hmm.
world of flashiness is being lost on a generation who think they're all going to become academic authors, or they're going to become superstars, or they're going to become whatever.
Why does
And
everybody want to be a teacher? That's the one I don't understand.
why wouldn't you want to be a teacher
No, why does everybody want to be a teacher?
right now? Is that what's happening?
Oh, I don't know. That's just something I'd noticed in the past. Maybe it's not necessarily the case today, but it
Why would
seems
you're
like
asking why would anybody want to be a teacher?
why does everybody getting out of high school want to go teach? Like that's the thing I don't understand. Go learn some stuff first and then go teach. Get some life experiences. We don't need 20-year-olds teaching high schoolers.
Well, I
Or do
don't
you
know. I guess you
disagree?
got to. I don't know. I never thought about it.
I
It's
always thought of
interesting.
teaching as a way to give back. I'm not sure how we got into this topic, but I'm going to run with it because I enjoy it.
Well, I don't know. I think that just things like becoming a general manager of a large department store, a
Hmm.
Walmart,
Yeah.
a grocery store.
Hmm.
These are jobs that most people don't ambition to earn. So they don't go, I want to be a general manager of a grocery store. But I'm pretty
Yeah.
sure that's a six-figure job.
Yeah, it could be. It also comes with a lot of responsibilities that maybe some people don't want to, though.
Well, of course not. There's a lot. I don't want very much
I
responsibility.
don't either anymore.
I I want some,
Hmm.
but I want to like I guess create my own leadership role. I guess I want my responsibility to be yeah. Generally, I don't want to take on the responsibility of a large corporation's image, um, and I don't know. I just quit a catering job because it was just like these people, this management, and it's always. I shouldn't have said that because whatever. It's this management in these hospitality environments are just like, why,
Hmm.
like, why are you so urgent? I understand about being urgent to get the job done. I
Yeah.
don't understand about being like worried, frightened, stressful, barking, these things. But not every environment is like that, but it gets to be like that a lot.
No,
And
that was definitely the environment in the steel industry. So maybe
I would
skip that
imagine,
career.
I'd imagine being in a foundry is pretty.
Yeah, most plants, they know exactly how much money they lose for every minute of downtime. So yeah, you want to talk about high stress and go go go, like that's exactly what you're getting in that field too.
That's the thing. So any field, if you're going to make decent money, if you want any kind of decent job, it's usually going to bring that. I
Yeah.
mean, name me
Hmm.
a well-paid position that's just easy street. It's
Yeah.
just,
Everybody thinks once they get to the top, then it's easy street, but I don't even know if that's necessarily the case either. Like, just have different bosses. The higher up you go, you got just different shit to deal with. Uh, it's all the same, I guess. I don't know.
even people, even nepotistic people. Um, I don't want to. The person I'm thinking of is rather divisive, but people like
Oh, is it
Hunter Biden.
was it one of those types that probably got picked on in high school and then got his first little bit of power and then wanted
I
to
don't
exploit
know.
it, or
I was
'cause-
just going to say Hunter Biden. Here's a guy that it doesn't have any particular career or whatever. Like, this dude is not amounted to a lot, okay? But yet he has managed to get into some very powerful positions and some tight positions. That's called nepotism.
hmm,
You want to We want to project onto a guy like him and say, I'm sorry if this is divisive, because I'm not like a conservative like person, but I'm
hmm,
also not a Democrat, that's for sure.
okay.
Um so it's like people want to criticize and assume that someone in that position is just riding coattails and it's easy.
Hmm.
But imagine being Hunter Biden. Imagine being the son of a senator and then vice president. Imagine being these people who you think they're just placed into life, into
Hmm.
these positions in life. But imagine being in those positions and being under that pressure, even if it looks easy. You know what I'm saying?
Yeah, and I think what you're getting at is really it's everybody has problems. Everybody has issues. Everybody has things that makes it hard to get up out of bed and face the day. And and if you're not happy in your life now, you're not going to be happy in somebody else's life.
Yeah, true suffering is in your mind. And it's like true suffering is a psychological experience,
Hmm.
truly. Like, there's pain, there's physical pain, but the torment that we really go through in life is it's in our heads.
Yes. Yep.
And so it's hard to understand anybody's real suffering. So in any case, we're now getting into some deep
Well, it can
zone.
salvage that because you just pulled out the psychological spot, and I'd say that that's where 90% of trading success is found is in understanding your own emotions and like accepting yourself and your faults and working to improve those. Like if you can't do that, then you'll never be successful as a trader.
Yeah. Um, there's a lot of emotions are swirling there, and you can't, it's hard to actually know if you're making a rational decision, whether
Hmm.
if it's taking a gain or taking a loss. You could be waiting to see that gain go up and then lose your opportunity
Hmm.
because you want more.
Yeah,
Or you could be so eager and you know it's going to go up more, but you just take it anyway. And I've been through all this,
it's
all of
fear and
these.
greed. Those are the
So
two driving emotions.
there's actually a lot you can reflect on and process about yourself, observe about yourself in trading it, which is something that most people don't think about um, with trading. They think
Hmm.
it's, I don't know.
They think it's going to be you just need to have the one setup that you can follow. Like you need to have like they think they can do it with data, and that's great. You do need that piece. That is a key component to have to identify where your edge is and to be able to reliably exploit it. The problem is the subconscious is a powerful, powerful thing. And the job of trading is very, very risky. And the subconscious doesn't like that. The subconscious will sabotage that in order to try to get you to do something safer. Like, you know what? I'd rather you lose. The subconscious would rather I lose my entire account and have to go back to work and have a steady income because that is
Oh,
safety.
there you go. Yeah.
Hmm.
Um, so where are you with that? You can't. Did you retire? You retired from your job, right?
Yeah, I'd retired 3 years ago to give this a full time, like a real shot. And coming up towards the tail end of that, I've got about probably another year before it's going to be make or break. It has not been smooth. It has not been. It's not been all failure. It's not been all success. It's been just a bumpy road. But every day I learn something new, and as long as I'm continuing to learn, then I am willing to continue trying to stick with it. I think
Let
if it ever
me
gets to,
ask:
oh, go ahead.
Are you flat, up, or down?
Overall, I would say I'm up, but I've been diving into futures, and the futures is where I've been trying to learn and create a new niche, and in that I would consider myself as up, 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 down, up, 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 down. So pretty much flat.
On
But
futures?
yeah, and we are talking. Was that before the recording started? About like my issue now is that I know I can make money, but I can't make as much as my head wants me to make yet.
Well,
And that's where I run into trouble when I try to force things or try to stretch, like you said, let the greed take over and I'm going to shoot for this target up here. And then it just comes back and wipes you out. Like those kinds of things.
yeah, I have stopped myself from adding to my portfolios because I really need the cash. I'm paying down credit card. I taxes kicked my ass this year. I don't even understand why they went up so much.
Hmm.
But that's enough. I should have a tax guy on the show. Just go through
Well,
my forms.
that is a
No.
smart decision, though, definitely to pay off the credit card debt. If you look at the interest rates on that,
Oh God, it was. I
yeah.
didn't even want to really add it up. I'm like, this is bad. And
Well, it
that's
makes
because
no
I was
sense.
investing in a business. Like I'm trying to
Hmm.
start this brand. Well, I'm
Hmm.
not starting the brand. I'm trying to take it to the next level. But I had to put something into it. Long story short, I absorbed a brand from that's like a fashion accessories,
Hmm.
and learned how to make the product and started making more designs myself. And that's heldgear.com for those that are curious.
Nice plug.
HELD. Most people think they don't hear it right. It's weird.
Hell
Held
gear.
gear. Held gear. So it's it's been a real lesson, like just getting into what it takes to actually start a brand based company,
Hmm.
um, and sell products to a highly competitive market. But I didn't start it; he started it first, so it was pretty cheap to start this business per se.
Hmm.
But I ended up running too much in credit card because I didn't take out any other loans. I need some inventory, need some supplies, charge it. And sales would come, sales would go, and
Yeah.
it's just fits and starts. And I would love to be doing nothing but that and stuff like this. But I've been careful, haven't thrown into the burning pile of money that is my portfolio. But I don't lose money. It's just that I sit there and wait and I dig deeper into a lot of positions. I still don't trade losses. I'll just go deeper in,
Hmm.
and usually it turns around at some point. But this year has been a year of bankruptcies, companies that fold or they get absorbed into other companies. Um, so it's been interesting to see that.
What do you base your trading on? Like, how do you pick your stocks that you like to trade?
That's a good question because I'm relearning that. There's certain things called, like there's the idea of the two-story rule. Uh,
I don't think I've heard that.
I want to say it's two-story rule.
Hmm.
uh, there has to be two stories about the stock that you like to get into it, especially
Okay.
if you're going to take it seriously. Sometimes I'll just grab something because I'm like, I think this is going to turn around 10% in the next couple of weeks and something like that, and just. But if it's something that I'm serious about, I want to look at um, these days. Okay, so at first during the bull market, I was really just going on percentages, looking at not even volume. I didn't even think about volume. I didn't think about anything. I just looked at the line and said, this is swinging like crazy. Right now it's down. I'm going to grab it and it's going to swing back up and I'm going to sell it. And
Hmm.
I did enough of that in ranges from 5 to 100% on the regular during the bull markets that it seemed like that was just all that I needed to do. Just
Hmm.
watch it slide, watch it on a down slope, grab it then, and then, and there was stocks that I flipped back and forth. Like I know that you, space,
Oh
Virgin
yeah, Virgin
Galactic, boy,
Galactic. Oh, how the
it's,
mighty has fallen.
yeah, that's a great, I wanted to talk about that with you because back when you were, I think I was last in your podcast, you were talking about that and you were like, oh, we just need another test flight. Because every time they did a test flight, the stock would move.
Yeah, yeah.
Now they're doing routine flights and it's just down. They're actually
Hmm.
in business, they're operating, and the stock just sits there or it swings, but it just keeps swinging down and in this low territory.
Well, now's the time to start watching it because I bet you the first time they print out an earnings report that shows that they're
Mm.
actually profitable, that's when you'll start to see some interest come back into it.
Right. Well, the thing is, like, they have such a backlog of people they have to put up in the air
Hmm.
that already paid, and they paid at a rate that's lower than what they currently are charging.
Yeah,
So it's like they're still in the money losing zone.
yeah, yep. And honestly, it's hard to invest long term in a company that's yet to turn a profit. In fact, I'd say as somebody who's just starting out, if you were looking for stocks to purchase, at least pick something that's making money. In
And
fact,
that's how, yeah.
as I said, I saw a great tweet. I think I can't remember if it was Flurry or somebody else who said, "There's if you want to look for the next stocks to buy and hold, play a game with like your 5-year-old or a young kid and see which brands they recognize, and all the ones that they recognize, buy those stocks."
Yeah. um, yeah. I mean, I have messed with a lot of micro cap stocks, and
Hmm.
there's a lot of risk and reward with those. They swing much more wildly, but these days I'm looking. I'm just kind of revising my whole strategy. One thing is that I still enjoy being in the Robinhood interface. It's
Hmm.
way cleaner. It's fast. I can move around and look at stocks real fast, reference my recent purchases, and a lot of stuff is just streamlined and easy to do. But if I really want to look at a company, I'll then toggle over to the next tab in Fidelity, and there I'll get a lot more data. And now I go over to the statistics bar, and I see what are their assets, what are their liabilities, what's their cash flow, and if that looks good to me, and their market cap is below their cash flow or they're well below their actual assets, I tend to think that's the kind of stuff that if you scoop those up right now, you will see those stocks double, triple, quadruple. Because from what I understand, in a bull market, I remember all the time you'd have companies with revenues going for about 10 times their revenues. The
Hmm.
market caps were 10 times the revenues. And have you heard that before? Because I remember hearing that.
I don't really trade fundamentals. I am much more technical in nature. Like I like to look at chart patterns, try to find supports and resistances, and look for indications that buyers are stepping in at, or sellers are stepping in at the places where I expect them to. So, like the fundamental to me doesn't really matter.
Mm. Well, I think that both are probably good ways to do it.
Yep, and then you'll see the fights all the time between technical analysis people and fundamentals, and am not on that ship. I respect pretty much everybody else's. I mean, there's so many different ways to make money in the markets. But, like, it all just comes down to you. Like, can you do it? Can you faithfully execute what your strategy is? And if you can do that, you should have success.
I agree. As long as your strat, yeah, you can't just be doing it on a whim all the time. Like, oh, it's down, fuck it, I'm selling.
Yeah.
Um,
Then you're just gambling.
and then you do see people lose a lot like that. Well, yeah. So I thought I remember hearing during the when markets were wild and looking at it for myself that it looked like um, a lot of stocks would be the market cap
Hmm.
would be
Just
about
way too high.
well, yeah, but it could be as much as 10 times the revenues. And I'm seeing a lot of stocks right now that are valued below even a year's income. And,
Like any particular ones?
oh, I could tell you a whole wide range. I have one. And this one's uh this is my biggest piece of shit. This is um Pennsylvania Real Estate Investment Trust, PREIT. They are a penny stock at this point. They have 1.7 and some change billion in assets, 1.7 billion in real estate assets, other assets, about 2 billion in debt. And they're facing a debt spiral, a second round of bankruptcy. Their
Hmm.
valuation at this moment is about $2 million. Their
What's
cash,
the what was the ticker again?
PRET,
PRET.
and their cash flows are in the 100 million range annually, but their market cap is 2 million. And that's because there's so much uncertainty about the future of this company. These malls are going to stay open that they own
Hmm.
because there's all these brands that want to keep their stores open. But as far as what's going to happen to the company, it's very uncertain and it's very shaky. A lot of controversy internally. It's basically just like everybody exited and
Is this a
except,
is this REIT not do dividends?
oh, well, they had to stop. They had to,
Ah, okay,
yeah,
okay.
because they were dealing with paying down this debt. I do have another REIT that has fantastic dividends, pays like 20%.
Is that the
So
one that looks like Apple?
I don't know.
There was one that was like Apple REIT.
There's a
Apple.
lot of them. I mean, they're a little risky, but from my experience, for the most part, they just sit there paying you dividends and
And the nice thing about a good REIT is they'll pay you on a monthly basis too. Like this
quarterly,
one here, APLE. APLE, I think paid out monthly.
monthly.
Looks, yeah. When I
What?
had it, it did. Yeah, yeah,
Yeah,
yeah.
it's a good part of
Yeah.
your portfolio mix. You put on a stop loss, trailing stop loss. That's something else I've been doing. I think it's pretty good to use.
I would
Which
suggest before you ever enter any position is you have your exit plan fully defined. If you're going to get into a position, then you need to know exactly when you're going to cut it and you need to know exactly when you're going to take your profits. Because if you haven't thought about that now, before you enter the trade, it's much less likely that you're going to be able to do something rational when the moment comes when it's time to actually act.
so there you go. Tell me about how you look at a chart. And there might even be a screen sharing function there, but
You want to pick one?
um, but you could just talk me through it. Um, yeah, pick a chart. Just tell me, like, okay, so you have the volume. Volume is important because it tells you when there's a lot of activity one way or the other, right?
Mm-hmm. Yeah, volume is the gas pedal. I'm trying to think of how George used to describe it. It's what gives you the moves. Like when volume is increasing, that's telling you that there's big players involved in that spot. So somebody's making important decisions at that spot. So when you have a lot of volume come in at a certain price, that's something that you should pay attention to.
Is it ever the case that retail is showing all this volume?
I would I would doubt that.
So it's
Just
usually
because
one or two players
let me see if I can.
swinging hundreds of thousands of shares.
No, you're talking about institutional traders and fund managers, like the ETFs that dominate the markets these days, like the spies and all the 401k baskets, like all of those things have to make purchases to keep their percentage allocations like within whatever they've defined in their prospectus. So I think that that's where a lot of the volume ends up coming from is when you start seeing those players getting involved. What was I looking for? Retail
Yeah.
percentage of volume. Okay, so the percentage of total trading volume from retail investors was about 23% from basically at the beginning of this year, from January 25th to February 1st, and that seems really high. That's all-time high.
That's well, that's what they say. There's more retailers, and that makes a lot of sense because it's now the friendliest it's ever been
Hmm.
for the average Joe or Josephina to get into trading. You can
Yeah,
do it in your Cash App. You can do it in, you don't. That's the thing is like you don't even have to start.
you do
A,
fractional shares. You can do
yeah,
crypto if you choose.
you don't
There's
have to get deep into it. You can just use Cash App or Venmo. Or I think Venmo just does crypto.
I have a Venmo, but I don't know you
I
could
think it's
actually
just
invest through it.
crypto. Yeah. So there's a lot of people that do it even just like that,
Hmm.
just for kicks. And I've done that with my Cash App, just throw something, squeeze a few more bucks out of it. In fact, that's how it all started. Before I was doing Robinhood, I believe I started doing Cash App Bitcoin.
Hmm.
But I kind of started doing those around the same time. And easily Bitcoin is my best performance. It's propping everything up. Like I'm flat at this point on stocks, back to about the few thousand that I put in.
Hmm.
But the Bitcoin is holding it's doing great.
I thought Bitcoin was supposed to die. It just doesn't, does it?
Did you thought it was?
No, that's what everybody said though.
Did
When
you?
FTX was collapsing, everybody. I don't mess with crypto personally.
Not at all.
No, I just don't understand it enough, and I don't like things that trade 24/7 because I prefer to be able to at least get a break. Like I know futures trades 24/7, but I trade basically RTH hours, uh, typical 9:30 to uh, 4 o'clock.
Well, you don't do limit orders and trailing stops or anything like that
Oh
because
yeah,
then
yeah,
you
yeah.
can stop
Oh yeah,
worrying
those
about it.
those are essential, but I also I also want to be at the computer for because when you're talking about futures, like a 10-point move can be if you're trading minis on the ES is $50 a point. So 10 points is $500. It goes quick.
Okay,
So
okay, let's get into that. Hold on. Let's
have you
I
not
mean, I didn't even
messed around with
finish I didn't
futures
even
yet?
finish getting into how to look at charts and how to because if I'm the kind of guy will just with stocks, I'll just because I don't do futures, all I do is stocks and crypto.
Hmm.
Um ETFs, same difference. Um I don't predict where it's going. I do a little bit. I go, okay, I look at it, I go, all right, I think it should recover to this or something, but um generally I just kind of go on feeling and I usually just I'm happy with 10 to 20%
Hmm.
generally. Sometimes I have a different idea, but usually it's like, okay, it's 20%, I'll take it. Or I'll put in a trailing stop and it'll go up a little more. Or, I'll just be like, whatever. At this point, whatever I get, I'll be is a win.
Hmm.
So those simple principles that I don't trade the loss. So I'm always going to make sure that there's a gain there. And but I don't predict the future based on charts. So you're looking at volume, you're looking at past prices, moving averages. I don't know. Can you say anything about how
It's
you
mostly
decide where it's going? and what your exit
Most
plan is.
Mostly what I'd be looking at is hourly or higher swings. So the lows or the highs that are set on an hourly chart, I mark those off, and I'm using those as my guide for where liquidity is resting. When the market makers are stepping in to make a move, they need trading volume in order to exit or enter their positions. And that volume is provided by retail stops. Retail stops collects above and below swings, swing highs and swing lows. So when you watch and you see a price break a swing low or break a swing high and immediately reject that movement, that's a very good sign that institutional money has gotten the move they wanted and they've exited their position. Like they've used that stop run for their exit liquidity. And at that point, if they're not going to continue pressing that forward, then the next target is going to be the swing on the opposite side. If we blow through those, then obviously they're looking for something bigger. So you go to the next hourly one and you wait and see where they start to try to protect themselves.
So how often do you hold something for just a day?
Yeah. And the futures market, like you're talking about 5
You're
to 20
talking
minutes.
futures, not stocks.
Yeah, yeah. But
Okay.
if you were to zoom this out, I'd probably do it on a daily then, and then just look at charts basically every day. Like, okay, we poked above this point, and I rejected it. Tomorrow morning, I could probably look to take a long position because there's no interest in going lower. They should want to go up and target the next liquidity spot above. So
Okay.
it's fractal. All this is fractal. If
How
you keep zooming in to tighter and tighter time frames, you can still utilize the same principles. It's just going to be more noisy because there's the more time frames you get on your side, the better off you're going to be. The 1 hour level also corresponds with the daily level, or if it corresponds with the weekly level, you can bet that there's going to be a lot more interest at that spot because now you've got day traders, you've got swing traders, and you've got longer term traders all looking at that same level.
right. Yeah.
Does that make sense?
Yeah. So there's a through line over a period of time that's that's in a fractal way. You see it on a smaller time scale, a larger time scale, and so on.
Like I've got a 5 minute chart of the SPY. I wonder if I can just share my screen here.
Share it. Yeah, it says share,
Yeah.
right?
Yeah, let's see. Don't show me that warning. I understand. Pick the right window.
Wow.
All right, can
Okay.
you see that?
Yeah.
All right. So let's go ahead and mark off some of these with some horizontal rays. Like here's a swing low. Stops will be resting in this area right here. You can see we come down through it, came back up. We never even challenged this swing up here, which is where buy side would be targeting to get out of their position. So we continue down to the next one. Swing down here. Zoom out a little bit more. We've got swings here. And again, this is 5 minute levels, not if we wanted to look at something a little bit better, we go to the hourly. But look where the target was here.
Yeah.
Boom. Right there to this level from Monday. There was no real interest. You see, they tried to push a little bounce up here, but they didn't take anything. Nothing. All these highs up here were protected. They never took anything. We're going lower. They never came up and even challenged this. They started to fill a little bit of this gap.
Mm-hmm.
I mean, you can just, this is just basically price structure. Let's go to 1 hour and see what that looks like.
This is the S&P.
This is
ETF.
the SPY. Yeah. Yeah, this SPY is one of my favorites just to look at because it's usually a little bit cleaner. Get rid of some of these drawings on here. I should have started with a fresh chart. So let's throw some swing lows on here. Swing low, swing low. They equaled that one. They didn't take this one. So where'd they go? Right up here and took this one.
These are percentages. These are like small percentages. Like if you buy at 453, sell at 459, you make $20 on a 400 $53 investment, or excuse me, not $20, $7, $8, or six
Yeah,
bucks.
it's not a lot, but these are predictable moves that you can capture, and then if you use the power of leverage, like you said with that margin account, once you can start getting a hold of options, you have the ability to make a much more significant move.
So until your average person like me doesn't have that kind of balance,
Mhm.
I need in Robinhood at least $25,000 before they stop dinging me for every trade I make within the same day. If I flip one stock
Mhm.
in the same day,
Yeah.
so
So in that case, I would say zoom out. Zoom out to a daily, a weekly, a monthly, and start looking for those levels there. And you can play this on a larger time frame, and you should have actually even more consistent success because the wider the time frame you go out, the more players you have at those spots.
yeah, I would say I generally look at these charts for one day. Well, that I'll toggle between the one day, 1 week, 1 month, 3 months,
Hmm.
and just look at those.
When you say that, are you saying 1 day candles or 1 day window?
Oh, yeah, the candle charts.
Yeah, when I say a daily chart, each candle represents 1 day. When I go to a
Got it.
weekly, each candle is 1 week. So you're looking at like years of price history in that case.
Right, right. Hmm.
But you always want to start from as far back as you can and build your way in, if that makes sense. Look and see what the higher time frames are doing because those are going to be the stronger trends, and then start drilling your way in. When you're trading off of a 5 minute level and you come into an hourly level, you probably need to give more respect to that hourly level because there's going to be more traders paying attention to that spot.
All right, let's take. I got an
Getting
itch.
a little too deep.
Um, I think it's something a lot of people aren't wouldn't be ready for. So
Okay. Okay.
you really do need a lot of money to even start thinking the way you're talking about, because you just don't have those
Well,
kind
you
of.
can still do it with smaller amounts. You're just going to have smaller rewards.
Yeah, but you can only do it 3 times a week.
Yeah, that's true.
Yeah, so it's like for most people, um, it's a long haul up to that point.
Yeah. Hmm.
Um, and you can, I mean, you can, if you do well, you can get it up there. I did grow well, it's mostly Bitcoin, honestly, when you think about it. Like I did like triple or quadruple my original
Hmm.
amount, probably doubled my stocks money or tripled it. No, because a lot of that was driven by Bitcoin. Because in Robinhood you have both. So
Hmm.
Bitcoin was just pumping everything, and really my stocks have just they don't move, they don't grow as fast as Bitcoin.
Well, it sounds like you have a better read of Bitcoin anyway, so why bother with the stocks?
I know, just do Bitcoin. Well, there's only one thing you do with Bitcoin, you hold it. That's all. Maybe, I mean, like if I had done everything right with
Hmm.
Bitcoin and with stocks, if I had sold everything at their highs when the markets, both of them were, heated, both of them were high at the same time, then if you can time that, then you're really good. And if you can hold your money and wait for the whole thing to come down, then boom, you just can gobble up twice as much Bitcoin as you had, or
Yeah,
twice as
it's
many shares. And
problem is it's super easy to trade with hindsight, but
yeah,
you're only going to catch tops or bottoms when you're lucky.
right.
Like that's not something that you should be planning to do, if that makes
Well,
yeah.
I mean, I think I knew better with Bitcoin. I knew exactly. It did a very odd thing. It went from it didn't hit the high that would have been predictable. Like it
Mhm.
usually 10x. This time it didn't quite 10x its last big run. So a lot of people saw it going a lot further. But then what it did do is it held that position for almost the whole year. That's another thing Bitcoin doesn't normally do. Usually it would rise real fast, peak real fast, and fall real fast.
Mhm.
But it would always hold a level higher than the previous 4 years. So in that way, it's gone from 25 cents to $40,000 you know.
Yeah, I didn't realize it been on that much of a run.
Yeah.
Yeah, that's nice.
Yeah, it's been good
I
lately.
would pay attention to the 46 to 48,000 mark, though. That'd be a spot where sellers would have to defend. If they lose that move, that could
That's going
go
to be,
quite a
I
bit
think
higher.
45 is going to be really tough to break. And
Hmm.
I thought 40 would be tough to break, so I got rid of a small chunk at 40.
Hmm.
So I think it's just going to take me longer to buy it back.
Yeah, well, you got time on your side.
But so the average person gets into can open a Fidelity or a Robinhood or other things.
I would highly suggest Thinkorswim from now Charles Schwab, what used to be TD Ameritrade. That tool comes with pretty much any account that you open up, and there is a lot of really
TD
awesome
Ameritrade is
features.
now Charles Schwab.
Yeah, Charles Schwab ended up absorbing them,
Okay.
but they still have the Thinkorswim app. I think you can open an account with like $500, and there's just a bunch of amazing tools that you can use on there, from looking at like option structures and like putting them up on and seeing what the risk profile looks like, to earnings history through past data, uh,
For the
price
average
books.
person, just the tools provided by these major brokerages, respectable brokerages like Fidelity and Charles Schwab, is enough
Hmm.
to go a long, long way.
Yeah,
Until you
yeah.
start making good money, it's not really necessary to start buying, paid features or
No,
highly
this is all
professionalized
free there.
trading
This is
apps.
all free at
Yeah.
or Charles Schwab too,
And
and I'd agree with that.
yeah, so once you're in there, then you can start doing some things. Like, first of all, in my Fidelity account, can I start doing futures at any
Probably not.
time with any amount of money?
TD Ameritrade, you can. If you're trading the micros, that's 1/10 the price of a mini. So I think the margin required to hold one contract is $400. Now, if you
It's
drop
not
below
bad.
that, they're going to close you out immediately. So you can't just
Yeah.
load up a $400 account and try to put one on. But yeah, with like a $4,000 account, you could trade potentially 10 micros.
What is a micro?
A micro is just a smaller fractional mini, basically. So the mini is, what did I say, $50 a point. The micro would be $5 a point. So a
Gotcha.
10-point move would be $50, basically.
Okay.
But with
Um,
that trading futures, though, you got to pay for data feeds and other things that come with it. So it's not as simple as just being able to load up a chart.
um, and what are futures? What define it?
Futures are negotiated prices of an asset. So, like if it's crude you're trading, say what was crude trading around, like probably in the mid 70s, I think. So, if you purchased one full contract of crude, I think you'd end up, if you end up holding it to expiration, they call you up and ask you where you want your 1,000 barrels of oil. That's basically what you're buying. When the contract expires, it's, if you hold it to expiration, you'd be taking an asset for it. If it's like the E-minis, the S&P 500, you'd be getting a basket of all the stocks that make up the composite index. Same thing with like NQ. If it's wheat futures, then you're taking bushels of wheat at the end of that. But basically, what you're doing is you're hedging price. The whole thing was created for farmers and other commodities people to be able to basically have some price certainty for their products. If you're mining oil or you're drilling oil, you want to be able to know what you're going to be selling that for, 3 months down the road. So you purchase contracts to hedge your position.
Okay, so let's take oil. Let's say
Okay.
you have oil going for $80 a barrel. You buy futures on $80 a barrel. You now own the right to so many barrels of oil for
Yep.
$80. Yes.
Except you're not getting it for $80. You're going to be paying 1,000 times that 80. You're basically buying a leverage product. You have, it's basically giving you like the ability to do that if you were to hold it to expiration. But most futures traders are going to be intraday. They're purchasing
Okay,
and
but let
closing
me
out the
just
position in
understand
that
the
same day.
concept. The concept is I am purchasing the right to a commodity at a given price.
I'm so I think actually the right is the wrong term there. If you hold it, you will be purchasing it, I should say.
Yeah.
In fact, that'd be a great movie, by the way.
It's not an options contract, which gives you the
Yes.
option.
Yes, exactly.
This is a contract. You
Yeah.
are so you don't want 1,000 barrels of oil showing up on your door step.
Yeah. Yes. So you need to close out your positions before the contract expires.
Right. If you fail to do that, then what? Can you sell that to somebody?
No, I think you're going to be getting a phone call and probably some pissed off people and maybe some potential liens.
Sell it
Like,
right back to them.
yeah, no, I don't think that quite is the way it works. But yeah,
Yeah,
the whole idea of the products though was for like farmers and miners and other people to be able to have some sort of price certainty for what they're producing.
but it's become a financial
Well,
product.
just anything that has uncertainty is going to have speculators coming in trying to profit off of the market inefficiencies.
Okay. Market
So,
inefficiencies.
right.
Like
Like
relating to the price of things going up and down.
right, like the forecasts are predicting a bumper wheat crop, and through my own research, I've seen that there's been less rain this year, and I don't think that the crops are going to be that well positioned. So you can try to speculate off of that kind of information.
Yeah. Yeah, I don't have much interest in that.
I don't either, not in wheat at least. But using just straight technical analysis, you can find spots, and they move quick enough to where like your typical position isn't going to last more than 5 to 20 minutes.
Mm. Yeah, you're almost like a robot over there.
Right, exactly. In fact,
Um,
I've tried that.
yeah,
Automating some of these.
yeah, I've heard about that. One thing I generally am always wary about is handing over the keys to my accounts to people who say they're going to automate it or something. I don't
Oh,
know how.
no, no, no. I wouldn't let anybody else do it. I'd try to do it myself.
I mean, I can sit there and program stop orders and
Mhm.
stuff like that, but some people actually do get algorithms running their
Mhm.
portfolios, but I don't know how you would do that without handing over your portfolio to a third party.
No, you just need, whatever your brokerage is would have to have the support for that. Like to trade futures, I use Sierra Charts, and Sierra Charts has, spreadsheet traders and the ability to write your own custom studies, and through that, I can actually program it to say, "Okay, when this happens, then I want you to buy this many. Put the stop here, take profit here."
God, I mean, even Cash App is starting to introduce stuff like sophisticated stuff like that.
Really?
Yeah, it's weird.
Hmm.
It's I don't like their interface, but they are pr- they're reinventing how you would I don't know, it's different. I that's it's kind of why I stopped looking at it because I kind
Right.
of want the more traditional uh information in front of me and they don't really do it. It's kind of weird. So I don't
Mhm.
recommend Cash App, but it's if somebody wants to wet their whistle, I'd say go for it because
Right.
you can buy and sell real quick on, Um, but okay, so then options. You get into options, and all I'm doing right now, and this is what I'd recommend for most people because I haven't even messed with puts. Every time I think I understand puts, I forget about it, and then I forget it's what makes it different. But calls are really a good way to get started. If you can afford 100 of any share that has an options chain, then you can start messing with this. And
Oh, you're talking about covered calls or
right,
yeah.
it's because covered calls are very safe because you own the shares, you can program it to sell at a profit, and you can take a premium in the meanwhile. And you can sit there milking it as but you can also sell it. So you sell your contract so that someone. I'm trying to explain this to anybody other than you. Um, you can sell your shares in an options contract to someone who will have the right to buy it on a given date. That's called a strike date at a given strike price. As long as you're happy with the date and the price, groovy. It's like a secure thing. And but that day comes, they might not buy it. And so you'll still have those shares. and then you can do that cycle all over again.
Basically, it's all going to depend on the price. If you sold a call and the price is above that strike, it will auto exercise. You will get those shares called away.
Uh, Probably. I mean,
Yeah.
but like, I'm pretty sure that's right. I think I've kept something that was actually. I don't think that's an absolute rule, but maybe not.
Mm, I have not yet seen it. You'd have to actually like decline it somehow because all the brokerages that I've dealt with, they all auto execute them if they're even 1 cent profitable.
That makes sense.
Hmm.
Maybe I'm wrong. I feel like I've seen it happen, but
And I wouldn't say no, but I've not seen it.
um, but you can also suppose you sell. You can also buy and close it if you think it's going to keep going. And I did that recently, and now I wish that I had sundial. I was riding it up, and it was going up and up, and I had a contract to sell at a profitable price, and I bought it back, and then it didn't quite work out.
have
It's
you have you ever
it's
considered using ratios on that instead? Like it would require a little bit more capital, but like if you had 200 shares or 150 shares, then you wouldn't be as worried about the call option being exercised because you'd still have at least some. Your upside isn't completely capped in that case.
Yeah. Sometimes I have more than the 100 shares,
Yeah,
um, but generally there's very few stocks that I could afford to own 100 of.
right. Well,
Um,
you can also look at credit spreads as another potential way to cap the risk of a call option or a put option, where you buy the one strike at like say I don't know what is Sundial trading at.
about buck 47 or something.
Okay, so let's say you buy the $1 or the 150 calls, and then what you do is you sell like the 250s at a 1-to-1 ratio in order to offset some of the costs of the first one that you purchased.
So you
So
sell a loss, but you hold. Well,
I'm sorry.
okay. It sounded like you would be selling a loss.
No. You're buying the 150 strike,
Hmm.
and you're selling like a 250 strike or
Oh,
something
sure.
further out of the money. So if they both hit, you're going to make the difference between those two, but it's capped at that point. But all that's really doing is allowing you to purchase the contracts at a slightly lower price because you're offsetting the leg that you're buying with the other one that you're selling, the other leg.
Oh, you buy one and sell the other, right?
Yeah, yeah, yeah.
Yeah.
And if you're doing that, if you're like you doing credit spreads where you're selling the contracts, that's a way you can cap your risk then at that point.
What do you
If
mean by
you
credit spread?
That's when instead of buying it, you're selling it. So you're taking a net credit after the transaction is complete.
Right. So if you don't have 100 shares of something, all you do is you buy a contract.
Buy a contract, and then if you can, well, I'm not gonna. No. Let's not. Let's not. If you don't know about options, let's just direct people to Eric Smolinski at ES Invests.
Hmm.
He has got a ton of content on his YouTube channel. Highly recommend people check out that stuff if they want to learn like how to really trade options the way like a professional does. Because I guarantee you, what most of us have read and learned, uh, they're not doing what he does.
Really?
Yes, he's primarily focused on volatility, which makes sense. We just did a episode on Monday talking about the different unknowns that goes into pricing an option. Volatility is the one unknown component. So volatility is where like the traders really need to understand that component in order to actually make money trading options. I'm not going to go into it because we're kind of getting towards the end of our
Yeah.
time here,
Yeah.
but I would recommend just check out Eric ES Invests on YouTube. Uh, Tons of great content on there. You can learn about some of his favorite plays. He walks through examples. He explains it. We've done a whole beginner series on intro into options. That's about 8 episodes deep now. Another good spot to jump into if you want to learn about it.
All right. So let's close and just tell me more about your show. Like, what are you doing now as Band of Traders? What's the idea of? Oh, by the way, I didn't talk about that, but I wanted to mention it on this. I thought it was very funny
Yeah.
that I had just put out a short documentary on my channel,
Oh
uh,
yeah, yeah.
through dot media slash band of strangers, if you want to check it out. And then boom, within a few days, I see you've changed the name of your podcast. It's Band of Traders.
Well, you
Now,
must
did
have.
you just steal that from?
No, no,
Nope,
no,
it
no.
was somebody else's idea.
Yeah, yeah. Kevin Jefferson. I think he's a forex trader. He messaged us after we did the first episode, and we'd actually come up with a name on that episode. True Trading is what we decided on. But he sent me a message saying, "I think this is a good name." And God damn it, if it wasn't way better. So I think we changed our names twice in a 48-hour window there. I ended up having to buy a whole nother domain and move everything over, like after we had just finished moving everything over to True Trading. So it's a whole big old fiasco.
It's got a interesting ring to it.
Right.
But so is the idea you're going to have kind of a
The,
returning cast of characters, but
yeah,
no
but
steady co-host?
we've got about 6 traders that kind of participate between myself, Joel Purdue, Baba Yaga, on Mr. Banks on Twitter, and Flary when he has time. He jumps in there as well. But the idea is just to build a community, talk about like the real things about trading that people don't talk about. Like how do you fight your market biases? What do you do when you have a drawdown? Like this type of stuff that you don't really see enough of. It's between that and just trying to build a community that supports each other and shares information and tries to help us grow. I think we've all been involved in communities where that's not the case, where you got one guy who's calling the shots or everybody's afraid to speak up, and that's not what we want. We want everybody to have a voice. That involves bringing them on the podcast. If somebody has a topic that they want to learn more about, I'll bring them on and stick them in a roundtable with an expert and let them ask questions. Like that's the vision that we're trying to go for here. Like traders helping each other. Together we're stronger. That's the catch line.
And for your website and stuff, do you have a kind of a bigger ambition for that? You want to be
Yeah,
the next Investopedia?
I'd like to build it to like a trusted place where people can come for resources and know that the information that they're getting is good. That would be my ultimate goal with that.
All right. Well, Godspeed. May you not have to go back to the foundry.
No shit.
May somebody else aspire to take that job, and may our foundries continue to churn out good American steel.
Amen.
All right. So what's the websites and stuff again?
bandoftraderspodcast.com. Then you can also find us on Twitter at financialinept1. Should have links in the bio there for if you want to join the free Discord, or I think the website also has like a whole bunch of deals that we managed to collect over the time of talking to different experts. There's a lot of good stuff on there. There's a guest directory if you want to search by past guests or categories. You can look at authors, CEOs, traders, educators, you name it, we've done it. And if we haven't, send me a note. I'll do it.
Okay. I'll let you go. You can. You don't have to run away. I'll hide you on the stream. But if you're busy, I understand. But anyway, say bye, Kyle.
Thanks for having me, man. It's good catching up with you.
Thanks for being here. I appreciate it.
Have a good one.
You too. There you go. I feel like it's just so hard to manage a conversation, especially about trading and finances, a complicated topic. I can just meander on and on about social issues, politics, music, arts, all kinds of things. I could just go on, but to stay focused, but maybe that's revealing, because when I'm trading, am I really focused, or am I just looking at numbers and dreaming? But proof's in the pudding. The pudding isn't gone yet. Okay. Encourage you all to take responsibility for your financial future. Get some Bitcoin and enjoy yourselves. Be happy. See you next time.